All right, I'm hanging up.
Hello.
Is it me you're looking for?
The jobs report was a bad jobs report. Why was it a bad report?
Because they don't want to pay more than $15 an hour.
Well, I mean, we live in America. Ain't nothing changed. they never wanted to pay you more than $15 an hour. But how was the jobs report a bad report? That's not why it was a bad report. Why is the jobs report considered? Why was it a bad report?
Well, it was look at it because they didn't create the number of jobs that they were supposed to create. Is that what you're asking?
They didn't?
Well, I'm asking. I don't know.
No, I'm asking.
Then they don't want to create any more jobs because they can't afford it. Companies can't afford to pay people.
Listen, are we guessing or do we know?
Well,
I'm definitely guessing.
So let's look. Let's open it up.
Is it because so they've been firing people? They've been firing people from.
There you go. There you go, guys.
I just said.
So listen. The number of job openings. The number of job openings are less than expected, right? Like we thought that we would have 10.5 million job openings, right?
Mm-hmm.
So last month we had 10.5 million job openings. 1 month later, we have 9 million job openings, or almost 10 million job openings. So we missed it by about 500,000 job openings. So if you walk this number back, there was a point in time where they couldn't hire enough mofos, right? Like they had job openings galore. They just couldn't find the people, right? Now you have all these people getting laid off, and it's not just me and you getting laid off. Now you got Don Lemon, you got that other joker, Tucker Carlson, you got these executives who are getting paid these high-end salaries are getting laid off. Whenever they come in and take over your bank, that CEO doesn't get that golden parachute anymore. So you have all of this upheaval, real people losing jobs. Does that paint a picture for a secure future or a troubling future?
Troubling.
Okay. So when rich people see other rich people lose their jobs, that makes them nervous. So whenever the powers that be see that there is unrest in the #1 economy in the world, which is our economy, when the US economy has problems, everybody's economy is going to have problems. There's no way around that. So with that being said, when you see these reports come out telling you, hey, we have problems, you need to pay attention because it's the report is going to be like that going forward. So normally you can look at this JOLTS report and you can get an idea of how freaking the NFP is going to go, right? You normally look at these numbers and they trickle right into the NFP.
Non-farm payroll first Friday? Is it first Friday of the week of the month?
Yeah, it's Friday.
Ooh, that's gonna push everything further to the TP.
Well, so it will, but I want you to pay attention as you go throughout the week. So if the jobs report is saying that we have less job openings, right? How many when you see that employment number at the end of the week, should it be high or low?
It'll be low because They're not employing people anymore.
It will probably be lower. So that's kind of the direction that I would look. I wouldn't look for a great or a powerful NFP report. Now, we don't know, but the charts normally line up, you know, the way that they need to line up for before the report comes out. If you're in a trade already and you're up, or you're in a trade and you're a decent way into that trade, you don't have to worry about, you know, the news blowing your account. I wouldn't kill my trade. I wouldn't cancel my trade. But if you're taking trades that morning, I would caution you against that.
Right.
But you got the Fed fund rates tomorrow as well, interest rates.
Yeah, you got the FOMC.
Mm.
So what do y'all think they're gonna do?
Raise the interest rates.
Yeah. Do you think they're gonna raise them a quarter point?
Honestly, I don't know, to be fair.
I think a quarter point, because everybody was urging him not to. Like, Congress was like, please don't raise it anymore. They don't even want to raise a quarter point, but he's still going to do it. But I think he's going to take that into consideration and only do a quarter point.
This year, to me,
You just had a bank closure as well, didn't you?
yeah. So listen,
JP Morgan took over another bank.
they did. They won the bid of that bank, but the Fed cannot show weakness because you have a bank closure, because the bank wasn't doing the right thing. The bank was over leveraged. So the Fed is going to find itself in a pickle. The Fed's job is to set the tone with the policy. You know, if the federal policy or the goal of this Fed is to bring down the interest rate, then the rates must rise, right? And it must rise despite problems with the banking system.
But didn't Yellen raise the debt ceiling as well?
Well, Yellen can't raise jack. Congress has to. Yellen wants them to. So this is
They
the
did.
storm.
Did they do it?
Well, no, man, they're arguing. They're doing what they do best. Congress, you know, I saw this skit the other day. As a matter of fact, Kim, that didn't they have some press day at the White House? What is it called?
The congressional dinner.
No.
I mean, not the congressional, the correspondence dinner.
Yeah, there you go. Did you watch that? Did anybody watch that?
What?
The congressional correspondence dinner at the White House.
No, I didn't watch
No,
that.
what was that on?
Well,
do with Jerome.
Anyway, I have this clip of the guy that did the little icebreaker at the beginning.
Are you going to show us?
Well, I mean, I have to send it in the text group, but he was man, he was funny as hell. But he was basically saying that politicians' job, you know, their job is to introduce legislation, but not actually pass it. So, I mean, you know, when is the last time that any Congress has passed, you know, budget control measures? They haven't. You know, I mean, you can look back years, and we haven't had to have a budget, you know, really since George Bush. When George Bush came to office, you know, that was when the budget just got out of hand. We went to war in Iraq. We had the crisis, and interest rates have been on the ground since 2009. So most of you guys here in this Zoom today have no clue of what it is, you know, to have 9-10% interest rates. You know, wow. I mean, I was a youngster back then, but it's not like it's the end of the world. I mean, you back then, we used to have to save money. I remember my dad used to get on me and my brother, because we'd be like, write a check. And he'd always be like incredulous, like, write a check. You got to have money to, you know what I'm saying? You got to save money first, and then you pinch off what you save to go buy the things that you want. Well, nowadays, we don't have to do that, because most of us have credit. credit cards, credit accounts. I was in the Army for 20 years. When I joined the Army, way back in the Stone Age, we had what we call DPP, delayed payment plan, right? You go to the PX.
Yeah.
Hey, you can sign for your little stuff. Hey, listen, I never forget this, guys. I had an $800 limit in 1992. I had an $800 limit. And when they told me about it, I went up to the PX. I got me 2 pair of Jordans, the black ones and the white ones on DPP, And then, back in the day, you used to go party, you had to get dressed up. So I went and bought me a suit so I can go to the club. Dummy. I didn't even have a car. So make a long story short, it took me about a month and a half before I maxed it out at $800. And my account was maxed out for about 4 months. Then all of a sudden, they raised the limit some astronomical number. Do you remember that, Selena?
Yeah, I remember.
I mean, it was an astronomical amount. They raised, I had something like $4,000 in credit. And it's because the system, they started relaxing these rules. And some genius figured out that, man, if you give these fools credit, they will max it out. And then now you have America today. All we do is live off credit. Why do you think, that the JPYs are the way they are and our currency is the way it is? Because our systems are totally different. And I'll get off this soapbox, but I just want to show you what I'm talking about. All right, this is the world interest rate, global-rates.com, right? If you look down this list of every country's interest rates, right? Our interest rates are 5%, and we acting like we dead. Look at Brazil, 32.75%. Look at Russia, 7.5%. Now, look at the country that saves first and doesn't spend first. Look at their interest rate. Negative 0.1. Why the hell can this country not raise interest rates and inflation is not killing them? Think about that. Why is it?
Because we get all of our goods from them?
No, that's not true. We get more goods from China.
They're saving. They're not doing
They
all that
save
stuff.
first, guys. They say, so listen, inflation, what is inflation? The very definition of inflation is there's a lack, there's a scarcity. The demand is higher than the supply, right? So if you have 1 pair of Jordans and 10 people wanted to buy those Jordans, the price is just going to keep going up. But if you got those same pair of Jordans and nobody wants to buy them, you can't sell them. You have to give them away. So there's no need for inflation to run wild. That's the difference between us, who they taught to be greedy, the Europeans, the Canadians, all of us big Western minds, we're greedy. We spend first. We spend everything. We spend everything. I was in the Army for 3 years before I could make one check last for more than 30 days, guys. 3 years. What's the definition of insanity? Getting your money on the first, being broke on the third. That's insane. 3 years. 3 years. Let that sink in. Now, if you think your kids are any better than the way I was, bruh, y'all don't know y'all kids. I mean, don't nobody budget. Y'all spent a whole year telling me how cheap I was. A whole year. But
this is how we grew up, millennials, for sure.
It don't make it right. I'm just telling you.
No, it's not. I mean, at 18, I had like 20 credit cards coming to my door every week.
Well, how about the people who have credit cards that don't have jobs? I mean, in America, man, think about this. In America,
they send them all the time. They send them to my son every day.
Listen,
Every day. There's one
every
missing in the
college
morning.
kid, every college
Every
kid,
college,
Wow.
yep.
every
Yeah.
That's how
college
they
kid.
do.
So think about
Mhm.
this. They will approve you for your credit card, but won't approve you for a home mortgage. You can be a working 18-year-old and can't get a home loan, and you can be an unemployed 18-year-old and get unlimited credit cards.
Crazy.
Why? But that feeds into that they're grooming you.
Cycle.
They're grooming you
Yeah.
to be on the tip.
Along with student loans, we were just
Of
groomed
course,
so-
because student loans, you can't even file bankruptcy and get rid of that.
Mm-mm.
So though once they get you, they have you, and you have to pay long term. It's kind of like the food. They feed you poison so they can hook you on these pills, and they got you. You're a you're a lifer.
Wow.
You know, you're going to contribute to this system for the rest of your life. So, let me get off the soapbox, but I just want you to understand why the whole world can go through the same pandemic, but every individual country has to adjust interest rates based on the ignorance of its people. And I say ignorance because if you know better, you would do better. Now, everybody's been telling you, hey, man, during the pandemic, nobody was working. So you can't go out and buy brand new houses. You shouldn't, because the housing supply is limited. But everybody wanted to buy a house. I don't fault people for wanting to buy homes, but the cars, the rims, all this other, all the stuff that doesn't appreciate, you're driving up the cost of inflation. This is the same problems that dudes have with simps. You driving up the cost, bro. You spending too much. Keep your money in your pocket. In Japan, everybody is chilling. Their money is in their pocket, in their bank account. They're focused. So this is why they don't have to have 5% interest coming off the same pandemic that we came off of.
But that comes down to their society being content with living off the land, the simple things.
It's their culture.
Yeah, it's their culture. Like you're saying, over here on the West, we've got this get me. I want to be the best. I want to be the biggest, as in, Britain dominating the world, such, and the US as well. Like, I'm here, the big media, capitalist society that we live in, and it's just in our face all the time. Big food, more clothes, more jewelry, more. And over there in Asia, the West, and Japan, they know the simple things. They're happy with the simple things. They're happy with, it's a simple life, and that they can live like that and be content. Over here in the West, we can't be content. We're greedy.
Greed.
Yeah.
And it's all around us. You can't, it's all around, like you're saying, credit cards through the door. But you have to have that discipline, like Todd's saying, to say no and to resist the temptation that's out there. Like, you could click on the news, it's always something bad. It's always something that's, negative. It's not going to give you happy endorphins, is it? It's going to give you, like, sad endorphins. So it's got a lot to learn. Because when you go to another country like Africa and you see how great they're living off the land, or if you go to Brazil and people are living off the land, or if you go to Jamaica, they're happy because they're living off the land. They've got the sunshine, they've got bananas in the back garden, mangoes they can just pick off and eat. Over here in the UK, we want things now. We want mangoes out of season. And what does that give you? Cancer.
There you go.
So
Really?
Well, yeah, because they're grown in a different environment. They're not from, if you're having mangoes in December and they're saying
they're from the laboratory.
Yeah, they're from a lab.
Or they have so many preserves on them that
you're
not really eating mango anyway. You're eating whatever chemical they put on it to.
Or they've frozen it. Yeah, they've frozen it and then they've defrosted the fruit or something to make it last longer or something. Like, I don't know the process of what they do, but it's not coming from Jamaica, that's for sure.
So
Oh,
listen,
man.
It's not coming from Brazil or Peru.
just to because I don't want to get us, off into a tangent. I want you to understand why, some of the whys behind what you're seeing, right? Whenever
Mhm.
you see a massive JPY sell-off, and we look at it as the JPYs are selling, they're actually getting stronger. Everything else is selling against the JPY. That's why the JPY pairs drop. All the JPY is on the back. So actually the JPY currency is getting stronger and the rest of those currencies are getting weaker against the JPY. But the reason why is because when you get a bad report out of the US, the #1 economy in the world, it sends a tremor. It sends fear through the market. So then you get that risk off environment and people are going to move their money to the Japanese yen because the Japanese yen is a safe currency, right? You're not going to get a big return on your money, but you're not going to freaking lose your money. Whereas these other currencies, we already saw how risky the Great British Pound was when that woman came in the office. What was that woman's name?
Which one?
The
Yellen.
the one that got ran out. Wasn't it a woman or was it a dude?
It was a woman. It was your old prime minister. She was only there for like 30 days.
Yeah, she got fired quick.
Theresa May, not Theresa May.
Whoever that woman was, the one that had the bright idea about basically forgiving some taxes. She tanked the British pound in 2 weeks. She tanked it.
I can't remember her.
Yeah, but that's why those investors that's why they take their money out of the risky currencies and put it in the safe currencies because of stuff like that. So whenever you see this big run on the JPY, and then you get bad reports out of the US, y'all know what's going on in the US. The economy is shaking, banks are failing, woe is me, this and that, right? So you can expect for our economy to, start slamming the brakes, right? That is going to happen. They've been telling us it's going to happen. The Fed has been saying we're going to have a soft landing. Whether it's soft or hard, in order for anything to transpire, you have to see a sequence of events happen. The JPY is going to have to get stronger, which is happening right now, right? They've had a good run to the upside. Now they should be a good run to the low side. And this should be a continual thing. We don't know what the interest rates will be increased to tomorrow, but a 1/4 point increase should be about it. We're in restrictive territory right now, but 5.25 is what they've been forecasting that we need to get to and hold, right? So the tail of the tape or the thing that tells the story is how long are we going to be able to hold? Jerome Powell said we're going to hold for at least a year. I don't know. I guess it just depends on how fast the economy deteriorates, right? So all these things you have to pay attention to, right? Like we can't just close our eyes because we don't understand. You're going to have to try to get you some knowledge. So when you start seeing these sequence of events, you know where to go for your trades, right? Whenever there's a risk off environment, if you're looking at MSNBC or, Mad Money, you're going to hear terms like risk off and risk on. When you hear risk off, you already know what happened. So what happened with the US 30 today?
It dropped.
Yeah, like damn near 500 points. Risk off environment, gold shoots up, commodities tank, and how long of a run will it be? Going into the week, what did we say? What did you think? Did anybody catch any shorts on the 30?
No, I just had a
Oh, gee, what did it do?
What's up, man? I love it.
Yeah, man.
Giving the people, man, giving it to the people. All the information's there. All you got to do is listen. There's a lot of noise, but ultimately they tell us, and we have our charts. So chart don't lie.
That's it, man. I get on this call every Tuesday.
Hey,
So, whenever I see something, I just try to, I try to pull the coattail so everybody can see the bigger picture,
it's beautiful, beautiful. I love it.
Yeah. So,
I got you 30 so, and I got the buy as well.
You say you got in for the sell?
Yeah, and the buy.
So I guess the tail of the tape will be tomorrow, right? Because if you look at this 30 chart, right? This is just a naked chart, bro. We got interest rates tomorrow.
Mm-hmm.
And we have this is the last line of defense right here, bro. This is it. It's probably about 500 points. 300, we are 300 or 400 points away from falling off a cliff on that US 30. Because if this order block doesn't stop the fall, it's woo.
It's on and popping.
Yeah, it's on and popping. So I don't know what the rate hike will be, but I guess the forecast or what's supposed to be priced in, and I do the little air quotes, what's supposed to be priced in the market is a 25 basis point increase, right?
Mm-hmm.
So I still think a 25 basis point increase will push this off a cliff. I personally feel like that because of the bank situation. But
and all the other hikes, I've heard rumors that it takes about 6 months to get the result of a hike. And we've had all those hikes from last year.
Yep.
So we're going to get the result of all of that.
Yes, I think I'm biased for us going off the cliff.
Yeah.
It has to happen on the chart, so you can't anticipate the trade. I mean, you can anticipate it, but you can't actually put the trade in until it doesn't, But
well, I like the fact that you can really be ahead of it because the spike happened within the last 24 to 48 hours. You catch the move out of the way, and then you let momentum take shape when the actual news happened. This is why you don't trade the day of the news. You want to have the position already intact. Yeah,
I agree. I agree with that. So if you had got in the sale today, right, or even yesterday, if you look at this daily chart where it wicked liquidity, you could have been in there. But a lot of people don't believe in that wick. This is what I keep trying to tell y'all, man. That daily wick is powerful.
Yes, sir.
That daily wick, when you see that liquidity grab, bruh, you got to get in for the sale. If you were trading the 30 and you saw that liquidity grab yesterday, you was in the money. Because now you're going to get that run to the other side. If I was a betting guy, I would bet big money that we coming all the way down.
Right.
So, we'll have to let it play out. And even if we do, there will be opportunity on pullbacks to get into a trade. But I'm not jumping into the 30 prior to that news based off of a whim, right? But
which one, the FOMC or the
FOMC is tomorrow.
NFP?
Listen, I think all of it. I think the FOMC is going to contribute, but I also think NFP will contribute too.
Mm-hmm.
So I just don't see any great news coming out. I believe the dollar will get stronger, but I don't think the indices are gonna have a good week. Probably not a good month.
I mean, it's funny how nobody talks about the narrative of no printing in the first quarter.
Yeah. Hey, can you share that? I don't talk about that, but can you share that?
So I've learned, and this is within the last year. I've been pretty technical in my days, but I've been running across, the fact that they're telling us certain things. And one of the things that I learned was that the narrative from the Fed was that there was going to be no printing in the first quarter, and that's not normal, right? So they printed 1.7 trillion at the end of the fourth quarter, which caused the rally. So they went from a printing situation to a no printing situation in the first quarter. So we're getting the result of what they printed in the last quarter or the fourth quarter. We get the result of that in the first quarter. Now the first quarter, the narrative is no printing. We get the result of that in the second quarter. So at the end of the year, this is the first time I heard, okay, we're going to print 1.7 trillion. And they actually gave us the number. So now the number 6.8 trillion at the end of June is what they've already told us is what they're going to print. And that's still not enough because they've raised the interest rate so high that this 6.8 trillion is probably not going to do too much. But the narrative for the first quarter was no printing. Yet Yellen came out and said that they printed 600 to 800 billion for the bank bailouts, which is nothing because hundreds of billions do not move the market. It's the trillions that moves the market.
Right.
And it's clear that the 1.7 trillion caused the rally last 2 weeks of December. The market was bullish January, February, March, already into April, already touching resistance. And now it's going to pivot because no printing, from printing to the polar opposite, no printing. So Ray Charles could see that if printing causes the market to go up, then no printing is going to cause the market to go down. And they play it that way. It's pre-planned. So once it starts hitting bottom, once it starts hitting support, they're already prepared to print the 6.8 trillion at the end of the second quarter so that when it hits bottom, they can pull it up immediately.
That's deep.
Very deep.
And that's good info. And those are the types of
The
nuggets.
things we don't know.
Yeah,
right?
those are the types of nuggets that can help. That can be the catalyst or the information you need to look for your trade setup.
Thank you.
Yes. Hey,
So, it all, man, it's all about sharing and it's about being in the right place, for the right information, and once you hear that type of stuff, you can't unhear it. You know what I'm saying?
hey,
It's stuff that you can watch for. It's stuff that you can kind of bank on. The same way that I bank on those daily wicks. When I see those daily wicks and those liquidity moves, I mean, I don't even think twice. I take that trade and I run with it because it's paid out for me so many times. So wherever the case may be, if you guys are looking to take the 30, to take NASDAQ or whatever, hopefully you're going to be looking to take them short. Okay. Now is not the time to be looking for longs. So I don't want to insult anybody's intelligence, but I just don't want anybody to get caught in that buzzsaw.
yeah, know where you are in structure. You're at the top of structure. There's no doubt about it. If you look at EU's resistance was 110, GU's resistance was 125, Bitcoin's resistance was 30K, gold's resistance was 2,000, Ethereum's resistance was 2,000. They're all touching resistance. And now you got the JPY pairs at resistance, and it's going to be contagion. What happens with the US dollar is going to get contagious, and it's going to affect the entire market.
There you go. So here's your USD. I don't know if you guys remember me telling you about this wick last week. We wicked at the high. We running low. So I'm looking at all this structure. What goes up must come down. So
All the way.
It depends on which way you're looking at it. You can say, hey, we broke this high. We need to retrace. Whatever. It's whatever way you want to look at it, we got to come down. So all of this lines up. We're gonna get an interest rate increase tomorrow. The dollar's going to get stronger. I mean, it all lines up. So whether you want to say you're trading the news or you're trading the technicals, it's all going to be the same thing. The thing is, if you can recognize your chart setup, just like he said, you're at resistance. This is what he's saying, because this is resistance. You're at the top of the market. If you know that and you get that wick, you're going to the south. It's all the same. ICT teaches the wick on the daily chart. There it is. Boom. Last week it hit you. If you trust what you see, now you can. That's a money move that you're in last week. And if you're trading a funded account, then you got to take your profit, but you can find a new entry, and it pulled up. So your entry could be right around here, or it could be tonight at some point. We know that the euro is going to drop against the dollar. That's what we're anticipating. So as long as the Fed doesn't do anything crazy, like not raise rates, it's going to be status quo, and those currencies will sell off against the dollar. You look at the Dixie chart, the Dixie's getting stronger. It's bullish. I dropped that chart on you this morning. Did y'all see the Dixie chart?
Yes, sir.
Yeah.
You got that Wyckoff at the bottom.
Mm-hmm.
And we're off to the races after this pullback. Isn't it ironic?
Mm-hmm.
Pullback is happening. Once you get that rate increase, boom, nothing but upside.
And it's supply and demand. Supply and demand. Demand means that they're just like the analogy of the Jordans, right? If there are none, then the price goes up. That's demand. Supply means they print in dollars. That means they're going to supply dollars. Not going to do that until the dollar hits resistance, and it's pre-planned. It's market manipulation 100%.
Yeah, all we have to do is take our opportunity. Be patient. Take the opportunity. We talked about the JPY selling this weekend. Now we here. You know what I'm saying? We talked about EA selling. It sold already. If you didn't catch the EA sale, take these JPYs, man. I mean, wait for a retracement. For EA, I was telling Selena earlier, I personally wouldn't mess with EA. There are easier trades out there to take.
Right. It's wavy. It's a wavy situation. EU touched resistance and GU didn't. And then GU touched resistance and EU was already done with it. Right. So once you understand how that works, you can now moving forward, because we have each other, right? Now we have this information and we can disseminate that and get everybody in the understanding. I call it a dialect, because we're all here for the same reasons. It's just that we don't have all the information. So somebody has a certain information here, somebody has a certain information there. We get the dialect legit where everybody can understand it. And everything is bouncing off the dollar. So you don't have to catch everything. For me, I'm getting to the point where I'm challenging myself to catch everything, because I understand that they don't hit the level at the same time. Right. So I want to have gold. I want to have a currency. I want to have an indice, and I want to have a crypto. And I know that they don't all touch resistance at the same time. Now I know all I got to do is be patient and allow things in this wavy fashion to give me an opportunity, just like with the JPY pairs. All the other currencies have already touched resistance, if not 2 weeks ago, probably 3 weeks ago. And then all of a sudden I run into Todd and he puts me onto the JPY pairs. I wasn't thinking about no JPY pairs until he said something, and it was clear. And you taking it all the way to support. This ain't, they say it's a pullback. Okay, wait till it starts breaking support over and over and over again. You're going all the way to true support.
There you go. There you go.
And you can dollar cost average. If you catch the sell at the top of structure, you're going to be so far in profit. You can dollar cost average your way into catching the bottom of structure.
Or you can wait for the pullback for, people in this group, just wait for your pullback. When you can fib the move, because that's the way they're gonna understand it here, OG. But wait for your pullback, and when it pulls back, you can hop in, whether it's at the 50, the 618, or the 78.6, and you can ride it to the bottom. However you trade is going. We're not changing anything about that. We're just telling you where to look, right? Like if you know the dollar is going to push up, we talked about it. We talked about this swing low when it happened. We talked about UJ needing to go up when it happened. We talked about all that stuff. So when you see it, I mean, it shouldn't shock you. You know what I'm saying?
Right.
All we're doing now is we're taking the information and we're applying it onto the charts, right? Which is why in my message this weekend, it would just be patient, be patient. the sale on these JPYs is going to be long enough where you don't have to get in at the very beginning. You know, you can wait for that order block to hit on that 4 hour because it got a long way to go.
And look at the dollar. You know, we know support is basically 100.750. So it's basically the 101, right? So 101, let's say it goes to 105. Okay, then it's going to come back to 102,500. That's the perfect 50% retracement. It's zigzags. It's never going to go in one direction. It's going to come back for air, and it's going to give you another opportunity. That's the nature of the beast.
Perfect. So whatever trade you're looking for, and let me hit on something because OG, you the man.
You the man.
If you look at this at when EU wick, what is that, Wednesday? This is Wednesday when EU wicked. GU didn't wick on Wednesday, right? GU wicks basically Friday. 2 days after. So this is what he's talking about when he says it's wavy, right? So AU might not wick the same day that GU wicks or EU wicks. But the point is they're all going to find the top, you know, pretty close or in symmetry, right? So if you miss, let's say you missed the EU move on Wednesday, but now whatever the conversation was woke you up and you were able to catch the wick on Friday, right? So now you hopped in at the top of this move when the market opened and you wrote it down. It's the same across those other currency pairs. So all the JPYs don't move at the same time, right? It's what did you call it? Wavy. It's wavy. I like that. They won't all wick at the same time. They won't all reach the peak at the same time. But if you see one of them, now you have the opportunity to catch the push in the opposite direction. Y'all know I don't record these Tuesday calls.
But you're actually recording this one though, Todd. You didn't mean to, but you
okay,
are.
Well, that's cool. Okay, if I'm recording it, then it's a bonus.
You can sell this, Todd. You need to sell this.
You know, I ain't selling that. You know, I ain't selling that.
I heard that.
You know,
for the people.
I appreciate the fellowship and the info. You know, I mean, I think that everybody moving in the same direction. You know, for me, that's a beautiful thing because if a trade is called out by TT, I get the information. If it's called out by Kim, I get the information. Even if I don't agree with the information, I'm aware of it. You know what I'm saying?
Yeah.
And it makes me a better trader because I could have the analysis totally backwards. But you post your analysis, and now I can see the other side of the coin because I can only see through my eyes because I'm blinded or I'm scanted, you know, a certain way when I view the market. Somebody else can see it totally different. That's the beauty of having community because all the information is set right there on the table and you can pick and choose because on everybody's phone, it's a buy and a sell. And I always tell y'all, I don't care about being right. I just want to make the money. So my analysis can be wrong as long as your analysis is right and I'm still going to get paid because I know how to click buy and sell.
So pay it forward mentality.
Yes, sir. Hey, I met OG in Ty's chat.
Rest in peace.
yeah. Ty's chat don't exist anymore. But you know, I mean, you just never know. You never know who you meet. You know, and you know, just through a casual conversation, we kind of discovered, man, we kind of on the same level, you know. And it just so happened OG have a free group, right? And then this group is free, and I'm like, well, that's crazy. The same vision that kind of just lines up.
That's what's up. That's amazing. Kudos to both of you.
Yeah,
I love Todd, man. It's a breath of fresh air. It's a shot in the arm. You know, we feel like unicorns. We're all looking for each other. We're all looking for activity, people to be as active as possible. You know, it's not a signal. You need to know why you're doing what you're doing. So it's not a signal. It becomes a signal because we're all on the same sheet of music and we're putting in work. So when somebody calls something out, it's not a shotgun. It's like people are really putting in some real good technical analysis to come up with what they're coming up with. So as long as everybody's lined up that way, there's no choice but to win.
And just for the record, hey, Ty trades quarters theory. Have you guys ever heard of quarters theory?
No.
But
I have.
No.
Whoa.
No, listen. Hey, Ty, you can. Ty uses
OG.
I'm sorry, Ty. I think the Ty, y'all. But
Ty don't know nothing about this. You don't
hey,
know nothing about this.
hey, y'all don't know what happened with Ty, but you know that was but OG trades quarters theory, and you know he uses an app called Signal. So I mean, y'all are free to download the app. But what I would caution you about is once you start changing the way you trade, it's gonna throw your trading off. Now, interestingly enough, he trades quarters theory. I trade smart money concept. We can see the same information, right? He calls it something different than I call it, but it's the same. So
He should do a Saturday's class.
What's that?
He should do a Saturday's class.
Well, I mean, I'll talk to him about it. I don't know his schedule, but
whatever you need, bro. Whatever you
See,
need.
look at God. Look at God.
Yeah, see, on Saturdays we do a meeting at 11 a.m. right?
Mm-hmm.
Every Saturday we meet at 11 a.m. That's why I asked you, you know, do you do Zoom? Like I do it regular, and every day at 5 there's a Zoom. I don't normally attend it every day, but somebody gets on here at 5 p.m. every day, and goes over the currency pairs that we identify on the weekend, right?
Mm-hmm.
So if anybody is lost or they have questions, normally they can log on here and get the questions answered at 5 p.m. on any weekday except for Friday.
All right.
Okay. On Saturday, we normally meet at 11 a.m. New York time. So
I'm with it.
You know, if you ever want to get on and educate the masses about quarters theory, that's cool too. But what I would say to the people who are successful or have a successful way to trade, right? If smart money makes sense to you, you might not want to learn quarters theory, right? Because if you're not solid, it's going to screw you up. It's kind of like it was whenever I switched from support and resistance to smart money. It was
But wasn't that a blessing? Oh my gosh.
Well, but you know, first it was like somebody was speaking Chinese.
True.
Once you get it, you get it. But you know, it's never good to switch strategies 1,000 different times, right?
True.
You trade the way you trade. But a lot of what OG does and the way he explains it, it makes perfect sense. So it's the same, you know, with whenever I try to articulate what I'm looking at on the chart or how price should move based on a smart money concept, he does the same thing based on a quarters theory, right? So
just what is it in summary? Just what is quarters theory?
Well, to me, I believe quarters theory is life because it starts with the time on the clock. You have 12 o'clock, 12:15, 12:30, 12:45, top of the hour. Yeah, first week of the month, second week of the month, third week of the month, fourth week of the month, first quarter, second quarter, third quarter, fourth quarter of the year. Everything we do on a daily basis is based on quarters theory.
So, OG, one more thing, OG.
Yeah.
Back in the day, you know, for the young people, the stock market traded via quarters, right? It was fractions. It wasn't the way it is now. Price moved by fractions. So it was $5 and a quarter, $5 and a half. That's how everything was on quarters. So go ahead, OG. That's kind of that feeds into why there's a quarters theory. But go ahead.
Yeah. So the reason why presidents are put in office every 4 years is the halving cycle is based on quarters. So every 4, 8, 12, 16, 20 years, we're at the 20-year trend right now. So last 20 years ago, this is exactly where the market was. The dollar was way at resistance and the euro was way at support. The only difference in what we have today and what we had in 2001 is the war in Iraq. So that's how you got the influx of dollars into the system supply, which caused the dollar to tank. So we have China looking to take Taiwan. That'll get the US involved. A war will give the right amount of supply of dollars to cause the dollar to crash 20 years later. So, you know, so when you take price, we'll take gold for an example. Gold was at 1750 at the end of last year, and it went straight to 2000. So that's the 1750 quarter. So 750 to 1000. So 1750 to 2000, and went from quarter level to quarter level. And then it broke down. So it's just breaking. So gold has a certain price number, the number structure. So 1750 is a number structure. Coincidence that gold's price structure is similar to Ethereum, and Bitcoin's price structure is similar to US 30. They have the same price structure. So you can break down the levels every time it reaches a new level. When gold reached 2000, as soon as it touched 2000, it went back to 1950. And then when it went to 2025, it came down to 2000. Then it went to 2050 and then came back down to 2025. And Ethereum, same thing. It went from 2000 to 2100, back to 2000, back down to 1800. It's quarter level by quarter level.
And in a nutshell, correct me if I'm wrong, OG, your if support is at 4.25, the next level it should hit is 4.5.
Yeah, and then 475 and 5.
Right. So that's the way he looks at price through the quarter levels.
Especially with gold. Gold respects its quarter levels like a champ. And now I understand why people love gold. It respects the quarter level. As soon as it hits a new quarter level, it pulls back. I watched it do it from 1750 to 1800, back to 1775, back to 1750, through 1800 into 1825, back to 1800, through 1825 to 1850, back to 1825, through 1850 to 1875, back to 1850, all the way up to 2048. It didn't touch 2050. Very key, because now it's trying to elevate again. Is it trying to actually go and physically touch 2050? I think there's a chance that it can do it. We don't have a lot of time left. So it might not do it. I don't know, but it's going to break down, that's for sure. But it's not going to break down like everything else. That's why everybody wants to put their money in gold, because they know it's not going to take as big of a hit. It's going to take a hit, but it's not going to take as big of a hit as the rest of the market. So it's just level by level. I think support for gold could possibly be 1650 to 1600, whereas Ethereum, okay, when we look at the last time gold touched 2000 and Ethereum touched 2000, gold went to 1600 and Ethereum went to 900. So basically from 2000 to 1000 is the range on Ethereum. 2000 to 1000, it's already done it, and it's probably going to do it again. And then when it goes down to 1000, the next time, if we do happen to go into the Black Swan event, then instead of touching 1000, it's probably going to go to 750. So I'm already looking at that. I'm trying to catch the sell from 2000 on Ethereum all the way back down to 1000 and possibly below that, because we're looking at a recession. The market's prices should reflect that we're in that type of a situation, which means it should be going right back to support. So we shall see.
That we shall.
Catch it high. Catch it high. Catch it high. You'll be in profit for 2, 3, 4, 6 months probably. On a simple sell. On a simple sell.
I think Bitcoin needs to come down here to about 12 and
12.
a half.
Right.
Yeah, 12.
And the major level is 10. See, it's probably going to 10.
Yeah, that's cool.
Yeah, we want that. Because when you look left and you look right and you're using Bitcoin as a temperature checking tool, you're using Bitcoin as a temperature check and you're using gold as a temperature check. As soon as you think that those things are at support, it helps you with all your investments because everything will be on a fire sale at that point. And when those things hit support, you can get everything that you want. I'm not going to spend 10,000 on one Bitcoin when I can go buy everything else at a lower price.
Yeah, I'm with you on that.
Right?
And you know, it might not even be Ethereum. It might be something cheaper than that. You know, kind of
Right.
like
Dogecoin.
yeah.
Crypto.com.
Yeah, that's true.
Shiba Inu.
Shiba Inu.
Mm-hmm.
So it's funny because my phone just pulled up a bunch of Shiba stuff. But so we'll have to you have to give me a Saturday that you want to break this down because
Anytime.
like
I'm always around.
do you log in on your laptop though?
Yeah, I'm on it right now. Yeah.
You're okay. So
I could share.
you say you can share?
Oh yeah.
Do y'all have a minute? Chat?
Yeah.
Sure.
Somebody wants me to check GC real fast. Hold on.
All right.
Let me check GC real quick.
Yes.
GC.
Block is what? What's the block? About 400, 500 pounds.
Elfie, this you trade this, Elfie?
Into your board,
That looks awesome.
into that back
Yeah.
half.
Elfie, did you trade it down?
I am about to.
Wait. What do you mean about to?
Well, I'm in the cell.
So were you in the sale Sunday?
No, I was not. I didn't catch
But
anything.
This
from-
what I, well, why you want to show up to the party late if you know, like, this is the same thing that I was trying to tell Prince. If you did your analysis this weekend and you knew this was a sale, right? I mean, you threw away, how many pips is that?
Whew.
200 pips? 114 pips? Now, I'm not saying that it won't sell, but I don't like the sale right now.
Mm-mm. You want to be out of the way.
You know what I'm
really
saying?
want to be out
Because
of the way.
you wanted to catch the move right here.
Mm-hmm.
I mean, it pulled back to my zone, the zone I had it marked up. Now, maybe it will fall further, but you got to wait until this gives you a new move. You know, you don't want to jump in for the sale now, in my opinion, you know, because you missed the move.
Mm-hmm.
But if you look at can you go to was it the weekly or the monthly?
All right.
Okay.
Like from the monthly, I think it hit from that long expansion, it hit the 88.
What do you mean from this way?
Yes.
I don't disagree. And here's what I'm telling you, Elfie. I think that this will eventually sell. You're trying to make it sell right now, though. Here's the problem that we have as traders. Just because the price enters our zone, it might be here for 3 weeks before it sells. You missed the guaranteed move, right? Now, price does look like it needs to push down, but here's where I would challenge you on this. It pushed all the way down here. Why would it retrace all the way back up like that? You know, now maybe we will get in here tonight and it starts pushing down. If that's the case, it'll give you another 4-hour order block and you can get in for the sale. But the fact that we bounced off of our moving averages, there's no way I'm touching this for a sale unless I'm 100% sure. I would have sold this down to the moving average like I had it detailed, like you would normally do. But I think now is not the right time. I'd be getting in for the sale. I would have got in Sunday, which is why I even had this marked up. But I took the EA sale.
Okay. Thank you.
All right.
And see, when I get new pairs and people are looking at these pairs, I start putting my alerts right on these levels. I mean, I don't do anything without trading view. So when I start running into new people telling me different things, and we get those markups like that, I'm putting my alert right into that eat zone, right?
Yeah.
And hits that alert, it's time to go to work. And having the ability, like in the perfect world with these groups that we have, and we'll have the GA room, we'll have the GJ room, we'll have the NZJPY room, we'll have the US 30 room. And people will be constantly on those pairs to the extent because they all understand the same dialect, and we can trust the person to our left and to our right because we all understand what we're looking for. And then when somebody calls something like that out, we can hit that chart and look at the zone. And if it's in the zone, we on the move. It's no doubt about it.
Hey, OG, hold up. Where have y'all heard that before?
You? It sounds like you're
We don't know. We don't know.
Never had this conversation. We've never even talked about that.
sounds like your perfect vision.
Yeah, hey, that's exact. I've said that exact thing, man.
So many times. Oh my God.
Yeah, where if we get to a level where all of us understand each other, I could take GU and EU. You could take these two. You could take, you know what I'm saying? Hey, and just post them charts, man. We don't have to miss a move. Yeah. I mean, I get it. You know, everything that we desire can happen, but it has to be work put in. You know, so this man came in here today the first time. He said the same thing that I said. The same thing, man. That's
like bounty hunters. It's almost like being a bounty hunter on these charts. These moves are not hard to catch at all. It's just that we can't look at every single chart. Yeah, that's why if I come across a new chart and somebody's speaking something about a zone, I'm gonna look at that zone, and then through quarter levels, I'm gonna put my alert at the area that everybody's talking about, and I'm gonna walk away. And then out of the blue, that alert goes off. I ain't even paying attention to it. And that lends a hand to patience, because now that I'm not even focusing on the chart, now it just gives me the ability to allow it to go where it needs to go. And I don't have to get put into a coma by the candle structure.
There you go. You don't have to sit there and wait on it. Nah. Or put in a dumb trade because you're trying to force it.
Right.
That's what I had to decide today. Was it between gold US 30 or USD JPY? And so US 30 looked like the winner, and it gave me all the confluences I need before gold did. So I took US 30 instead of taking
I like
JPY was a bit slow.
I like gold because it's going up for air. So just give it some time. Gold's really, it looks like it's going up for air. Yeah. It needs about what is that? I think the last time I looked at it was like 2016. So that's 4 pips away from the 50 quarter. So it has time to get up there. I don't know if it can make it, but if you can get it above the 2025, that might be a pretty good position to catch on the stuff.
I did have an alert set for gold for the buy, but like I said, I saw US 30 was gave me the confluences for a sell after that.
I caught US 30 at the peak. I'm feeling myself right now. That looks awesome. Man.
You can share your screen, OG.
Oh, let's see. We gotta pull it into the Zoom. Let's see. What is this? All right, here we go. Yeah, this was crazy yesterday. Let me just run by this real quick about the quarter levels yesterday. We were navigating, all right, the exhaustion of this move from support to resistance, right? And then when we started talking about, well, first of all, Todd brought it to our attention. So once he brought it to our attention, I was like, okay, it's at resistance. And then it starts going sideways. This little area right here of low volume and sideways movement. When it gets tight, right? When the candles get tight, when the consolidation is tight like that, it's gonna break out with a nice expansion. So 14 hours, and then we get the gravestone doji. We get this gravestone doji right here, or no, right here. And then, okay, this is okay. This is a reoccurring theme to me, right? When it gets to an exhausted point, and then it started with all these pips, and then it comes up here, and do you think for 1 minute that the market makers are going to allow you to put sells all on this level without trying to stop you out? And sure enough, and we're looking at 85, right? 85 is what I call a major key quarter level, right? 85,000, 85 flat. So from 85 flat, we got to go to 85,250, 85,500, 85,750 to 86. That's 1,000 points, which is 100 pips. So it goes and challenges the 85,500 quarter right here. So if we look at that, right, put it right on the money. Let's see, we're right below it. So basically got the 85,400, and then it broke down, and then I call this a center line. Right, before any of these candles got in play, it gave you the ability to place a line right here. And what I like about it, I use the bodies, I don't use the wicks. So you got resistance, and then over the top, now it's support. That's a perfect area to put a line for me. But when I put that line there, it's not resistance, it's center. I call that center. The market likes to come off center and then come right back to center, exactly what it did. So I caught the move at 85,250. I didn't get 85,400. I went to sleep, but I did have a limit in here because I knew it was going to come out and try to stop out this wick. And then when I woke up this morning, it was already back down. This is what I expected for it to come back down to the center line. So now that this is the center line, anything above the center line is a sell. Anything below the center line is a buy. But I don't want to get caught with my pants down with a buy at the top of structure. The top of this entire structure, very clear. Look at how much movement, right? If you compare that to everything you see in here, look at where it was right here and where did it go to support? What's the expectation? Back to support. That's just what it tells you. So you take it as such. And then it goes from this level to this level, comes back and does a 50% retracement. Pretty much on the money, comes back from here, right? Here's the top, here's the bottom. That's about an 80% retracement. That's the top, that's the bottom, 50% retracement. That's the top, that's the bottom, almost 100% on the retracement. It's gonna, and this is leaning to what Todd is saying about how it will continually give you another entry. You don't have to catch the first entry, you can catch the retrace. And it does it all day, every day. This is an hourly chart. It's telling you higher the time frame, stronger the signal. You do this on the higher time frame, you're going to get the same structures. And it's going to come back and do either a 50%, 80%, or 100% retracement. So we get those opportunities all day, every day. This is our job. This is what we do.
Hey, OG, before you leave this chart,
what up?
Please explain again about the market maker putting you in a coma with these candles. Please.
Oh, yeah. So I heard somebody say this. I don't know who it was. I'll be out looking for stuff. As much information as you can get from a YouTube video or a news feed. You get a lot of information you don't need, but chances are you're going to get information that you do need. And what I heard the person say was the market makers create liquidity. So they're going to leave you here. And this is what I love about this pattern. You see it all the time.
And reiterate how many hours that was.
That 14 hours. You got people setting sales up right here for 14 hours.
14 hours.
And they got knocked out because what people do is they don't even just put in one trade. They put in like 10 trades.
Hey,
Now,
I'm guilty. I'm
if,
guilty.
yeah, same here. Now, because of that, I only push for 5 trades at a level. Because if you get 10, now when you go in a drawdown, you're getting in drawdown times 10 instead of 1. If you would have just took 1 trade right here, you'd have been okay. But no, people take 10 trades, 20 trades, and now they're in drawdown by 20, and they can't sustain. And then it hits a level and comes back and does exactly what you wanted it to do, and you got a better position than you originally wanted. So this is a gem that you should take and make sure that when it does something like that, do not fall for it. It's going to stop it out and then do exactly what you wanted it to do. And you'll hear people say it all the time, man,
Selena,
I don't
make sure
know.
you tell your
And then
brother.
it did it all. It did exactly what I wanted. Yeah. Yeah.
Hey, Selena, make sure you bring this gem to Terrence.
I will.
Yeah, that pattern right there, that straight across pattern, it'll happen at support, it'll happen at resistance. And I'm an RSI guy, so I like to be overbought. Like I don't, when you look at this RSI meter, overbought is the dotted line, and then you have the midline, and then you have the bottom line, right? That's oversold, and then the upper line is overbought. And obviously, when it first got overbought, was right here, right? So people think, oh, it's overbought. Now look, that's the level that it was overbought, and look what it did. Like, so you can't just depend on when it touches this line, man, that's the turn point. No, you got to be very careful about that. Now I call this ultra high. That's ultra high. Now, even at that level, here we are right here. See? And then it curled up again. It's another high, curled up again and again and again. But see, this is why I don't like 84. 84 is not, it's nothing. It's 85. It's 82,500. It's 85. It's 80. It's not 83. It's not 84. It's not 87. It's the quarter levels. 80 flat, 82,500, 85 flat, and then 87,500, and then 90. That's big picture. That's the geographical picture of quarters. And then once you dial it in and you get to a level like 85, and then you're looking at 85, 250, 85, 500, 85, 750 into 86. That's a 1,000 point range. So from 85 to 86 is 1,000 points. And then we got to break down points to pips. So 1,000 points is 100 pips. 100 points is 10 pips. So you break it down like that. But I say that to say, again, when it starts going sideways like that, you want to be very prepared. Because I would say, if not 8 to 9 times out of 10, because nothing works 100% of the time, but 80 to 90% of the time, when you get a level like this at the top of structure, it's going to do a shakeout, stop plant, and liquidity grab, and it's not even going to go up anything crazy. See, it did the crazy stuff right here. But if you look at the price, it's 83. That's not a major key quarter level. That's an in-between, which is clear reason as to why you're not messing with that. But before all of these other candles got into play and this became overbought and you're looking at this level, the first thing you should be looking at is that price, 83. That makes no sense. 83 makes no sense. 85 makes perfect sense. You would have stayed out of the way simply because it's not at, it's in an in-between price level. A number that makes no sense whatsoever. That's why I say gold, 2,000, right? That's the position of interest, right? So if you put your sell at 2,000 on gold, you're gonna win. It's just a matter of what type of lot size you're using. That's gonna keep you out of trouble. Now you can put a 0.01, the easiest thing we can do, on gold at 2,000. I can guarantee you that you're going to get that 0.01 from 2,000 back to 1,750, back where this push started from. It's going to go back to support. So you can put a 0.01 on gold at 2,000. Okay. So when you put that 0.01, the easiest thing you can do at 2,000 on gold, and look, it's already at 2016. Matter of fact, let's go over there real quick. All right, look, pushing resistance again. So let's see here. 2016, exactly where I said. All right, so it's falling short of the 2025 quarter. All right, so I put my first entry in at 2000 at a 0.01. Now I'm putting another one in at 2016, 0.01. The goal is 2025. So once it hits 2025, I'm putting in a 0.02. And if it goes beyond 2025 and it hits 2030, another 0.02. I'm trying to get it to go up and touch 2050. That's my goal, is to get it at 2050. And we have very little time. Like, yeah, we got 24 hours before this news comes out, and gold is giving you a peak position. So the news can add volatility. It can spike up and do the stop hunt. It can spike up and go touch 2050. It's not going to 2075. I'm going to go ahead and stretch to say that already, because the market is about to crash. So we got the market back into a corner, which you love to have that. How long did it take before you can have that? It was bullish from the last 2 weeks of December all the way through March into the end of April. It's still trying to push resistance and still giving you another opportunity to catch a peak sell position that's going to take you back down to 1750 minimum, because it could probably go to like 1650 or 1600. But that should be it for gold. 1750. If you can get from 2000 to 1750, then you already won, because your goal is to really get to 3000 on gold. We know it's going to go to 3000, but when it goes to 3000, it's going to do the same thing it did when it got to 2000. It's going to go to 2000 and it's going to break down to 1650, maybe 1500. When it gets to 3000, it's going to go back to 2500. That's the perfect retracement. So you want to catch this sell to take you down in profit, to go down there and catch the buy. And this is something that I like to do personally. Like I said, when I hit a level, I like to have at least 5 trades. I have different reasons for those trades. One of the trades I'm going to cash out. One of the trades I'm going to use as a hedging tool, so that I can go down there and dollar cost average and make sure that I catch the buy at its lowest point, because I'm going to take that buy and I'm going to take it all the way to 3000, and then I'm going to cash that out. So, and then let the retrace and correction happen, get it back down to 2500 and take it from 2500 back up to 3000. And then you'll be playing that range between 2500 and 3000, probably for 20 years. I remember when gold touched 2000 for the first time, which was what, 2 or 3 years ago, and being new to trading, being new to price action, everybody thought that when gold got to 2000, that was going to be the new norm, as the price of gold was going to be above 2000. Didn't even stay up there for a week, and it just crashed right back to reality. And it's going to do the same thing when it gets to 3000. The first time it touches 3000, we got a guy in our group, Jerry. We talked about the move into 2000. We knew that it was going to 2000 when it got to 1950. First thing gold did, it got to 1950 and then broke back down to 1900. I think it got down to like 1809, if I remember correctly. It got down to 1809, and then ultimately it went to 2009 and broke down. And we already looked at the 1809 number as it started making its way up to resistance. We were looking at 2000. And then it touched 2009 on the money. The first high point that gold touched before it came back to 1950 was 2009. The beauty in how the number was so pinpoint, that the low was 1809, because we were looking to catch the buy at 1800, and it came up 1 pip short. And from 1809, it went to 2009. So he caught the sell. We all did, really. He caught the sell from 2009 and went back to 1950. He made $22,000 in 4 days, just because we knew where it was going. And we knew that it respected its quarter levels. Every time it hits a new high, it breaks down. And every time. And it was right there, very clear. So.
Yes, sir. Yes, sir.
That's what we're waiting on. We're waiting for this thing to crash. It's going to crash.
It's funny you say that, because I dropped a picture in our chat. I guess this weekend or Sunday or Monday, I don't know, but it showed gold and the cliff. The cliff is right under all. You see all those lows right there. That's the cliff, you know,
Mhm.
the lows on the chart right now. That's the cliff. It's gonna fall off that cliff. Now
Mhm.
the news shot it up today, but it's gonna come down and hit that cliff. When it hit that cliff, it ain't got. I mean, it's a free fall, man.
Yeah. And look at that. That's a 50% retracement.
Yep.
You measure from
Yep.
top to bottom.
There you go.
That's right there. And then you got it's a head and shoulders. I mean, look at the shoulder right there. You got resistance right here. It's right up under it. This is a little bit of overshooting right here, but this is the shoulder. And you got a little peak right here. That's at 2025 quarter. The head is at 2050 and the shoulder's at 2025. Symmetrical.
I can't wait for it. I'm patient enough to wait for it, but yeah, it's gonna happen.
Yeah, I got it at 2048. I caught that peak. I'm just holding it. Doing nothing. If it gets to 2050, that'll be another gem. And then look, it's overbought again.
Yep.
This entire structure is overbought.
Yep.
It's gonna break support. Mm-hmm.
I like it.
That's the beauty of having a power team. Everybody brings something to the table, and
I agree. It's confluence. If I see it and then somebody else has the set, man, it's confluence.
Yeah, group confluence, power group confluence.
Y'all have any questions?
No, I appreciate you sharing. You know, my mind be on overload, but thank you. I don't have any right now.
Yeah. Same.
Thank you.
Thank
The
you.
more we do that, no problem. The more we do these things, you know, it sounds like French at first, and then you just get used to the terminologies and the analysis. We're all doing analysis, so a lot of it should make sense. Being able to trust the fundamentals that we're finding ourselves with. We don't have to know all the percentages. I need to know if the Fed is printing or not printing. That's pretty much the biggest thing of importance to me. And not printing for a whole quarter. It's going to be nasty. So
it's going to be nasty.
Yeah, and the games that they play with investors, that's what's so beautiful about being a trader, is that we can go both directions. Traders can only make money for the most part if the market goes up. And
yeah, okay.
And the market's going to push you into the euphoria of bullishness and get you into buying at the top of structure. And once you lose, it causes a snowball effect of margin calls that creates so much momentum that it can't stop. And it's just going to keep crashing through every support level until you hit the true support. It's just crazy how lazy people can be when you get these crypto videos and buy now. Like, you guys spend so much time making these videos and you have no idea what you're talking about, and you're leading people into the slaughterhouse. It's very disgusting.
Yep.
And the market loves
that.
it. The market loves it. And the market wants these people to continue to do that. And it's never going to end. And now that you understand the nature of it, you won't fall into those traps, because they're never going to go away. Now I can just laugh at these videos. They make no sense on something so simple. Buy low, sell high. The thing that we're all supposed to know, and yet they fall for the same mistake every time.
Yeah, you're right.
But we're here now for the people.
For the people.
For the people. Pipping for the people.
Yep.
All right. So y'all are y'all's hearts and minds clear?
No, my heart and mind ain't clear.
We're gonna get you to that bag. You're gonna be good here real soon. Real soon. Real
Hey,
soon.
Selena, your heart and mind should be clear, and your pocket should be full.
Yeah.
Well, so I told you earlier that I didn't have the right lot size in on EA, so that's all on me. Because it went up 130 some pips.
Oh my God.
I own that. I
So-
own that.
So what are you looking at now?
What? How much more I need to make 10%?
Well, I mean, what trades are you looking at?
Oh, I'm gonna look at the JPY pairs now.
Yeah, I mean, I thought you should have been all over that. Because
They might be out of there. I think that's done. Isn't that done?
well, you gotta
Yeah,
look on the 4 hour for like UJ and what I guess all of them on the 4 hour, because
Yeah,
EJ.
I
got a
think
50%
GJ probably still has room, but it might have to
G-
retrace first.
Would you say that GJ is ahead of everything? Because I think it is. I think it
It
did
probably
everything
is.
before.
It probably
Yeah.
is.
See, it's not pulling back at
Yes.
this point, you know. See, it did everything before everything else did, and it's leading the way, what it looks like to me.
So I would look for these moves, especially on London. Like if it doesn't sell this 4 hour candle or that one right before London, then it's gonna sell on London. But I don't, like it's kind of early because it's just 446. It's kind of early to see what this 4 hour candle will be. You know, what I really like, I would really like to get a 4 hour up candle.
Yeah.
And
To
then
collect the order.
there you go. And there you go. And then get in on that next 4 hour candle because it's going to give you that bearish order block and it's going to sell. But that's just ideally, that's how I like to play it. Maybe GJ is not it. Maybe there's another one, maybe because all the like CAD, JPY, EJ, AJ, they all set up the sell.
Yeah, see,
So that one looks like it might buy. That one might buy up a little bit on this 4 hour candle.
Yeah.
Which would give you a good opportunity.
So you see this right here in between.
OG, what are your indicators? What moving averages do you have on?
I got the 20 to 50. Well, I have an 80 in here. I don't really use an 80.
Okay.
I use the 20 along with the 50.
Okay.
And then it kind of goes, it's wavy. My 50 is the in between. And it's funny because if you notice, right, if I measure from the bottom to the top, right? So if I measure this level here into this level here, and then I measure it from here to here, this is the 50%. But look at how the 50 EMA is always seems to be at the 50% retracement point. That's funny. And I've noticed that over time that what is it about the 50 EMA that it reacts that way? So I use the 50 as my in-between. So now I use the 20 to cross the 50. I use the 50 to cross the 200. My 200 is purple, my 200 EMA, but I also have a 200 MA. So I use my 200 EMA with the 200 MA, and then I use the 50 to cross both of those to the downside, and then I use the 50 to cross the 20 to the upside.
So your death crosses when the 50 crosses 200?
Yes.
Okay.
Double time, because I have both of them. So I'm gonna have one double cross, death cross here and a death cross here. Yeah. So when you do get the death cross, there's times where, let me see if I can find one. It'll come back and retest the cross. Let's see.
There's
I
one.
don't really. There's one here, but it went way out there. You have one here. There's a cross right here. All right, let's mark it right here. The death cross happened right here. And there, you see, retest it right there.
Do y'all know what a death cross is?
It's when the 50 crosses over the 200.
They call it a death cross because that means that the price of your stock, or most people in the stock market call it a death cross, but the price of whatever you're trading is going to crash. Is going down.
Mm.
And then you have the golden cross. It's just when it crosses going up.
Yeah, it crossed going up right here.
And they call that the golden cross. So
now look, see, go ahead.
Well, I was just going to say, I always, whenever I used to talk about these moving averages, I use a guy named Oliver Velez. I learned moving averages from watching his videos. But it's all like, once you understand what the moving averages do and how they help you, it's like butter. It's like adding another tool to the toolkit, man. Now you don't have to use that adjustable wrench. Now you got socket set. You know what I'm saying?
Yeah.
So it all works. You just have to be consistent, in what you see.
Now see this white EMA right here, that's the 200 MA. That's not the EMA. It's more smooth, right? So it's not as constricted into the candles. This one's more wider, right? So when we had the cross right here, see the 50 crossed the white, and then it came down and retested right above it, right above where the cross happened. So once you get the cross, and this is a 4-hour chart, right?
You can wait for the retest.
Wait for it to come all the way around and start heading down right there.
Hey, can you fib the low of where it crossed, that candle where it crossed to that retest? I'm just curious to see if that's a 78 point. That's probably higher than a 78.6, but
bottom to top.
The wick of that candle.
This one?
Well,
or at the cross?
The cross, the wick of the candle at the cross. To the wick of to the top, to the wick of the top of the candle where it went. So from there up, there you right there.
Yeah, 78.
See, that's crazy. It's not crazy to me, but it's just all confluence, man.
It's very confluenced, yeah.
Question. Okay, so can you go back, OG, when you was talking about those right at the edge of EJ, you was about to say something about the order block, like the price.
On the 4-hour?
Yeah, you was like saying price tapping into that area.
Yeah, let me get rid of this. So what you like to see, right? Like even here, as we have resistance, this is structure. If I put a box on this structure, right? This structure right here, right? It has to come out of it and then come retest it. See, and that's what it did. It came over the top and then retest, spike, right? So that's from the bottom going up. So now we got to go up to the top level and find the established structure of whatever kind of structure, right? So I'm looking for the bodies. So I know that these bodies right here, these right here, level, 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 level. That's how I know that that's where the line goes. So I'm gonna bring the line right here, because that's where the respect is. I don't mess with wicks. That's what it could have been. I'm talking about where the money is. The money's in the body of the candle. So when I get candle bodies sitting in a line like that, that helps me put the line where I believe it should go, right? So now there's another level right below that. It's right around in here. These bodies meet up with these bodies, right? So I could put another line in there. I could put a box, but I'm just gonna put a line like that. So it basically creates a box. Now we do know with, what do we call it? Fair value gaps. This is a fair value gap because of that wick right there. This wick right here, right? So this hasn't been collected. Now, not only has that not been collected, this whole candle has not been collected because there's no wick on this bearish candle. So I could pull this up to this candle too. This is all fair value. This is from the level of this wick right here all the way up to here. It's fair value. We got a little bit of a wick on this red candle right here. So part of this candle got collected, but there's still a gap right there, which is right at the peak of that wick right there. So now I can make another fair value right there. So we got fair value all the way through here, and then we skip a little bit because that's collected, but this was not collected. So if you can get any type of a pullback into these gaps in here, then you're going to get it coming up for air and giving you the next lower high, collecting the order before it takes off, or coming up to knock out this position and scare people out of the move before it decides to come down. And then if I measure, once again, you know, I could just take these, I could put this at the very top, right? And I could put this at the very bottom. Okay, so that's what it's done. That's been its starting point to its end point. So now that we have that, then I take this measurement from the top to the bottom, and then I cut it in half. It's right in this gap right here. That's the 50% retracement, just based on this little bit of price structure that we have. So that would be your entry point at the 50%. Got to be careful though, because it can go all the way up into a stop point. So why would you want it here when you can get it up here? And then what's the price? 151,500 basically. It says 151,620. If I bring it down to the candles, that's about 300. So the 250 quarter, 151,250 to 151,500 ish. Right, that wick is basically 151,500. Even if it says 151,650, I don't consider that price. I consider the nearest quarter level, because it didn't get to 151,750. That's 151,640, so it didn't make it to 151,750. So that's 151,500 in my mind. So if I would have got in at 151,500 and I put my stop loss at 151,750, it would have not hit my stop loss. So 151 is the point of interest. 151,500 is the point of interest until it breaks another quarter level. So if I would have been with you guys and we were talking about this, I would have caught that one, but I would have been focused in on 151,500 with a stop loss at 151,750. Now I'm in profit. I could take a partial when it decides, you know, it's starting to hesitate. I can take a partial. Let's say I put a standard lot at 151,500, I took out 0.75 and I left 2.5 running, 0.25 running. And then if it comes up here again, I'm gonna put another standard lot in and I'm gonna hold the 0.25 just in case it wants to go to 151,750, and I'm gonna put another standard lot that right there with a stop loss at 152. And then I'm gonna carry that back down, because what if it starts ranging? This is where the range started and it came down perfectly. See, it came from this level, it transitioned to this level, and then it started going sideways. It already told me where support was. So now I knew to take my profit at support, right where the range started. And then it went to resistance, now it's at support. Go to the resistance, come back down to support. And when it decides to break out, whatever direction it's gonna break out, you've got that, and then it'll probably curl around and retest the break point, because that's the neckline. And then right here, that's also a neckline. So once it got into this level right here, it went over the top, broke through, and it comes back up and retests the neckline and proceeds to the downside. Always playing 50% retracements. You don't necessarily, you just need to know where it's at all times. And then if you ever decide you want to make a move there, at least you know where it's at all times. 50% retracements do work. Nothing works 100% of the time, but if you're a person that is just strictly a 50% retracement type trader, it's a winning strategy. Anything over 50% is a win.
What's up?
Thank you.
Yep.
Well, I love it. I love it. I love it.
Hey. All right, you good there?
And that touches right at the 4-hour MA too, the 50%.
Yeah.
Mhm.
For me, it's just that everybody does it a little differently, and it all works the same.
Yeah. Everything's based off the same mathematical equations. Every time a new candle comes out, it recalculates everything, like all the indicators work.
Yep.
Yeah. Whatever fits your eye or whatever makes you better, you use that. Anybody who's doing this properly is doing the same thing. It just looks, whatever definition you want to put on it, it's the same result.
There you go. Man, I think everybody needs to hear it from a different voice, though. You know what I'm saying? Sometimes the same voice gets stale, or they just don't believe you. And sometimes what's that?
Having great people. I mean, I'm hearing the voices in here. You hear different. What do you call it? Like one of the girls in here sounds like she has a British accent.
Oh yeah.
We need that.
Yeah,
we need that. We're all explaining the same things, but just a different. What's the word I'm looking for?
Point of view.
No, the sound of your voice.
Dialect.
Oh, dialects. Accent.
No. Accent. Yeah, different accents. People just are attracted to a type of accent. See, so if we got everybody speaking the same language and then you're hearing these different accents, it's just sauce on top of sauce on top of sauce. And we got plenty of people in here that could explain it to you. Once everybody in here knows how to explain it, if I drop off, the next person can pop right in and go right to exactly explaining everything that's being explained. Nobody's missing a beat. It's fire.
But hey, that's exactly what I said. When I can't be reached because I'm somewhere in Budapest or Colombia, hey, somebody just pick the torch up and keep going.
That's right. And got backup too. We're backing each other up. Everything's good.
Man, that's the goals, bro. Man, I so do appreciate it, man. I appreciate the drip and the knowledge, man, because I'm a firm believer that everybody is not gonna get it the way I explain it. I'm a firm believer. That's why I encourage everybody to come up and share what they know, because somebody will understand it better from you than they have been from me for months. You know what I'm saying? I can only explain it the way that it makes sense to me. And unfortunately, some people didn't grow up the same way I did. They don't come from the same background.
Right.
Maybe they don't learn the same way. But just like you spit that quarter stuff, and I understand perfectly. Even though I don't, I didn't learn the quarter theory, but it's the same. It's support, it's expansion to resistance. It leaves imbalance. It's a retrace to the imbalance, and we off to the races. So however you've learned it or you're picking it up, I mean, I think it's all added knowledge. You use tools that I don't really use. RSIs, I know how to use it, but I don't necessarily use that. Your moving averages are a little bit differently, and you use them differently. But it's all just adding tools to the toolkit. But the important thing is the analysis always comes back the same. So
accuracy.
That to me is the confluence. Yeah, I'm excited.
I'm very excited.
Thank you so much for sharing.
Thank you.
I've been doing this every day for 4 years. Every day.
Every day. There you go. I mean, well, I feel you. I've been ever since I discovered this in 2020. I've been doing it every day too. And I believe in it. It's just one of those things where I feel like somebody finally let us in the door, man. Like I can't believe that they left all this knowledge on YouTube.
Yeah, YouTube University. I love it. I'm a PhD, that's for sure.
PhD, bro. PhD. And then, when you find people, like yourself, who's not trying to get paid, just sharing what they learned, to me, that's powerful.
When somebody taught me how to do a Zoom meeting, when I first found this, and I was inside Swag Academy, right? And somebody I'd never done a Zoom, and they was like, oh yeah, just do this, this, and this. So as I was learning what I was doing, I was teaching already. I was teaching as I was learning, because people needed interaction. They weren't getting the interaction from Swag Academy. You had to pay $800 to go and talk to Swaggy. I'm like, why? I mean, what about everybody down here at the $300 level? Nobody's getting no interaction. So we went in there and made WhatsApp groups and started doing Zoom meetings. I was a truck driver at the time. I'm pulling trailers off the door, getting them unloaded. I got my headset on. I got somebody with the chart up, and then I'm just talking through the chart as he's moving the screen and everything. And I'm just doing it while I was at work. And people were just like, I was teaching them EMAs. I was teaching them, that's back when I was scalping. I was on the 1 minute chart. Don't nobody trade the 1 minute chart. I was tearing that 1 minute chart up. They're like, how is he doing it on the 1 minute chart? I'm like, yeah, man, that's what you do. Yeah. But that was fun, man.
That's powerful though, man. Like, I mean, the testimony itself, man, that's powerful.
Powerful, like
people,
powerful.
Yeah, people are coming from all backgrounds. That resonates with me because, our story is almost the exact same. You was driving trucks and I was on the railroad.
Right. Yeah.
So it's the same, and you just kind of hustle until you make it.
Right.
So yeah, it's deep, man. It's deep. It's funny because like we was in your boys group for a minute, in Ty's group for a minute.
Yeah.
I never really talked too much in that group.
Yeah.
And then I guess I saw you that one day, and somebody was saying you had a group. So
it was funny because I remember saying that you were in the group already because you had a name similar to someone in the group.
Oh,
so I told them to reach out to you to come to the group, and you weren't even in the group yet. And I was like, wait a minute, I thought he was in the group.
Oh, okay. Yeah, it's probably Pip Huntington.
Pip Huntington, right?
Yeah, I saw Pip Huntington in Ty's group too. And then I saw the group. I was like, oh, okay. But yeah, I didn't really talk, in Ty's group. I'm in a lot of groups that I really don't use.
Yeah.
If somebody is struggling, I'll try to help people. But for the most part, I just sit in the back. But for whatever reason, I saw that conversation that day.
Yeah.
God's plan.
What's that?
God's plan.
Yeah, probably. But like it turned out, it ended up being an argument almost. You know what I'm saying? Like
it was weird.
Yeah,
weird.
You was helping people, and Ty got offended. I'm like, it's your group. You got to help these folks, man. Like
they're asking you for help.
Yeah, people ain't showing up in your group because they want to fan watch. They trying to learn.
Right. You see, but see, he young, so it's age appropriate.
Man, Ty ain't young, bro. Ty, what? Ty,
he young.
How old is Ty?
Nah, he young. He got a young spirit.
Oh, okay. Yeah,
and it is what it is, Yeah. But you're not the end all say all. That's why I keep saying, like, you don't punch down on the community. You keep saying you about community. You just went out and fed the homeless, and you in here punching down people on your group. Like, come on, man, that don't add up.
Yeah.
I understand defending the brand, but you're supposed to be helping. I've been helping so much in here, and people even told you that, and you still not listening. You talking about how much you doing, business 101 and all that stuff. Bro, you're not helping nobody in here.
Exactly. They not here because you're the man in business, and you got a book out, and no, they here to learn, man. They here to try to emulate the success.
Yeah.
But I guess some people just get lost, man.
They do. And in the street mentality, you're supposed to be out of that now. You're trying to put that on steroids. No, the pride comes before the fall. I mean, the Lord said, don't play with him. Don't play with him. He'll get you. Yeah, I ain't got to do nothing. You're going to do it to yourself.
Yeah, that's crazy.
Yeah.
Yeah. It's hard to believe. I mean, but you know, whatever I think back on it, man, like all those series of dramatic events in that dude's community, and now the community is gone. You know what I'm saying?
Yeah.
Like it's not by accident.
But look, he was threatening. See, if I would have took some snapshots of that, that could have been a lawsuit. So I think somebody told him to go ahead and erase that. I thought about it afterwards because I didn't get a chance to respond. Before I even saw the messages, he dropped the whole group because he wanted to eliminate.
What happened? I didn't see any. I don't know what you mean by the threatening messages, but
he said that if I would have came up to the event, that they was gonna press me. Like, what you mean you're gonna press me? You don't even know what I look like.
Yeah.
See, you better watch your mouth, young man. You better watch your mouth. You talking crazy to people, you don't even know where they at.
Yeah,
Don't do that. That's crazy. You got all this that you've developed, and then just like that.